Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up for Wednesday, the 10th of July, 2024. We saw today Fed Chair Powell wrap up his second day of his semi-annual testimony to Congress. Went before two committees. Didn't say anything new today. He's being very, very coy. Made it very clear, as he said yesterday, and he said it again. He said, I'm not going to tell you what our next move is. Basically, they don't know themselves. They need to see data. And they're going to get a big piece of that data now. Now, he might have seen that before he spoke this morning, but the CPI data comes out in the morning, and I'll show that to you in a minute here. But it's going to be an interesting day. Keep in the back of your mind, you're up to levels now that many analysts, and I use the word many, and I'll put quotes around it, had set as a target for year-end prices. What do you do if you keep going up right now? Do they just keep raising forever? You know, what happens is eventually a market really does get ahead of itself. We will see. And remember, the Fed, the reason that they're going to cut interest rates when they do cut them, I don't know when that'll be, is because they fear the economy is slowing down and they want to boost it back up. But that slowdown sooner or later will show up somewhere. So this could be right now for the rest of the summer an interesting time is the point that I'm making. I don't know if we'll get the numbers they're looking for, but instead of me talking about it, let's show it. We get the CPI data 7:30 a.m. Central Time. It's forecast up 1/10 on month over month compared to May's flat number. On an annualized term, the latest forecasts I saw were up 3.1% from the year ago month. The core CPI, a favorite figure of the Fed, is expected up 0.3% in June compared to the 2% gain. So there's something going on. We're looking for gains of 1/10, and the market expectations are in there. The Fed sees it. Will the Fed consider that, yes, that falls good, it's where we want, or are they going to say, no, we still want to see declines, and that doesn't make June count as one of the months that they'll look at? I don't know. But any way you cut it, these are the numbers. Now, obviously, numbers higher than this, I think, take June out of the equation, that it's one of the good months that the Fed will say, now we saw enough in CPI and PPI for June to have been labeled a month where everything fell. Make the numbers lower than this, well, you've already had labor weakening. And in fact, the Fed chair today made it very clear. They don't see labor now as the problem. Now they're back to focusing on this part of their mandate, and this is what they want to see come down. What they don't want to see is labor weaken too much. That was my takeaway from everything. Jobless claims are expected tomorrow to be off 2,000 from last week. We're going to get tomorrow also the amount of and for natural gas, and we'll talk about that, only a 55 billion cubic feet of withdrawals. They are pumping oil and gas like there's no tomorrow. I think Hurricane Beryl woke up all refineries, and they have to say to themselves, what the heck? We've never seen a Hurricane 5 this early in the season. It's a wild card year. The Atlantic is much warmer than it's ever been, and maybe we should get more into reserves. It wouldn't surprise me that they think that way. The Department of Energy today put out a bid for another 4.5 million barrels of gas that they'd like to buy by the 18th of the month, 8 days from now, but they want to buy at $3 under the current price. So we'll see if they can end up doing that. All right? So that's where you're at with that. You can see you had a good day in Microsoft. NVIDIA up another $3 today. ARC not going anywhere. AMC sort of a nothing market. What I thought occurred this morning carried through for a good part of the day. And I wrote this morning, I said, you know, we have been like watching paint dry in a number of these markets over the past few days, especially the futures where so much of this is based on. Today, futures got very volatile. And I said, all right, the traders are telling you they're placing their bets, you know, just like a roulette table. They're placing their bets, the wheel spinning as to what the CPI number is going to be. They're not going to watch the market. They want in, they don't want in. This is where they go. And that's how the day did turn out. Amazon up nicely. It's not far from the highs that it recently made. That's a stock that's come to life. Schwab, okay, came back a little bit here. Even Home Depot gave you a nice bounce today. Why? Because if CPI and other numbers fall, people will say, well, now I'm going to have a few more bucks. I can do things for that. That's how I'm viewing what it is. All right. So when I look at GLD, and I told you, this is a chart that often gets a lot of gaps because by the time it opens, futures trade 23 hours a day, starting Sunday night through Friday. All right, they finish at 4 o'clock Friday. They're only closed 1 hour, 4 o'clock Central Time on Monday, Tuesday, Wednesday, and Thursday. Then they're closed until they reopen on Sunday come Friday. So you get gaps if things happen overnight. All right, if the futures move big, the market moves to capture it because it's based on that. When you take a look at GLD, the spot, you can see how the market came down. You are in an uptrend here. The market is holding over the 18-day average. So where do you think the resistance is? You got it, the upper Bollinger Band. And 95% of the time that acts as a break on prices or an attempted break area where if they're moving, they try to hold back. You can see how it did it here, how it's done there. All right, eventually it pushes its way out. But to do that, it's got to have what it had here. It has the recipe for it. You have to narrow in the bands a lot, like you've done, the upper and lower band, and then you have the energy in the market to break out one way or the other. When we look at RSP, this is again the equal weight S&P. Well, for the first time, I'm back in an uptrend for a while. That's exciting. And this is the first time since you peaked out back here in mid-June. So now coming in, you have higher lows, higher highs, trend up until you take out yesterday's low, upper Bollinger Band area. I've decided to put in uranium. Uranium's coming alive. I'm seeing that, number one, in the U.S., we're talking in Illinois, a lot more plants that we like to get on. Anywhere you're going to have these AI facilities, putting in a small nuclear plant, if it's reasonable, not close to a lot of people, blah, 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 it makes sense because they just are renewable energy going round and round the circuit. Even Australia is considering doing it now. They haven't had that period, and they are considering it. Very interesting. You just came alive because Cameco came out and said they gave very strong forward guidance, and they make all levels of this. They're in Canada, and it's all levels of this, and it's very interesting. So I'm thinking that maybe we have finally seen the end of the correction, and that gets interesting to me. Rivian doesn't stop. Ever since that new money came into them, and remember, their plant in Illinois is now running those extra lines. We're going to see delivery numbers, I think, that'll be impressive. When we look at FCX, Freeport, still strong. Copper hasn't gone away. I realize you backed off from this top here, but it really didn't do a lot of damage on this chart. I like the fortunes of this company. In Lennar, you now are to the point where expect short covering. So this market lost its bearish embedded reading. I'll be surprised if you don't hit the 18-day average before you get through these lows. So look for it to get back there to figure out what next. And the same identical pattern hit you in XHB. So now that you're out of the embedded reading, the odds favor you're going to try to make a run to that 18-day average as early as tomorrow in them. In XLF, the trend is up, but you're overbought and you're caught in this narrowness up here. Could the CPI numbers break this out one way or the other? Of course they could, and so can the PPI on Friday. In the industrial sector, no surprise to me that you went back to the 18-day average. Stop there as you're waiting to see, do they get help from a CPI set of numbers that give the June in the win column that sooner rather than later we're going to see lower interest rates. They'll be looking. And remember, you don't need the Fed to get lower rates. The market functions very well without the Fed. If it feels that the lower rates are coming or higher, it does the Fed's job for it before the Fed gets to it. You do realize that. I hope you do. In XLE, higher high, lower low. You came down to the 200-day average. You're just marching around, and this is called spinning your wheels. Maybe a trader's delight. I don't even see that, because in order to make money, it makes you do everything wrong. You got to buy the big break to get up here. It's not a trend following market. By the time the trend kicks in, you're right into the resistance point. So I'm not crazy about that. In GDX, okay. So here we are with a market that is latched on to the upper Bollinger Band. It's called the Gorilla Glue trade. And it's a sign of strength, not necessarily as overbought as you think. It often results in this market trying to embed. So if it embeds, it just tells you how strong the market is, and you're going to go up probably and set even higher new records. In SLV, not quite the same, but there, you can see how you're fighting with it. Overbought as well. COPX stopped on its first challenge right through here. Market coming down. I saw an interview today with Jeff Curry, who was betting the house when the copper was up here that it would keep going. Not one word about it today was interesting. It was all about oil on CNBC. I realize they call these guys on, but he's a top analyst, and I'm surprised they don't say, hey, Jeff, what about your call on copper? TLT, lower highs, lower lows, and the market down here to the 92, 92.64 area. I look for this 93.04 level. By the way, in all fairness, he did say he's still quite bullish copper. He doesn't think anything's changed, but they never called him. Well, you bought it up there. Where are you now? Oh, answer that question. To get TLT friendly, we got to get over 92.85, close over the 18-day average. That would be a bullish sign. So be ready for that. A bearish sign would be getting under 91.87 and closing under this 91.90 level, and you open the door for 90.38. Tomorrow's a real important day there. In the dollar index, you're still in the downtrend, but you've stalled and you're oversold. Stalled in price, oversold here. It's all going to be about CPI tomorrow. And you went up to the upper Bollinger Band installed in FXE. So you put this together and you've got to be very, very cautious. At 7:30, the algorithms are going to kick in. It's going to get crazy. You might want to take advantage of our futures offers. These are free to you in this manner. This is just some of them. They're behind me, and you have a screen there. It's called the free offers on our website. You pick and choose what you'd want, and at the bottom of it, you'll see a page finally show up where you put in your name, your email address, any message you have for us. It comes to us, and typically within 2 business days, it's in your hand. We'll reach out to you and things of that nature to make sure you get it. Everything comes via email. You'll need, if you get our charting service, some passwords and user IDs. We'll get those to you the same way. So you can get everything you need to get yourself set up. Hope you take advantage. I'll be with you as fast as I can in the morning after the CPI, but first I got to see the numbers. I want to analyze them and understand what I want to say. I'm Ira Epstein. You have yourself a great evening. I'll catch you first thing in the morning on Thursday. You take care.